Ever looked at a financial chart, this complex tapestry of price action and just felt overwhelmed trying to figure out its message?
Oh, absolutely. It's easy to get lost.
Right, in that constant ebb and flow, trying to figure out not just what's happening, but really why.
The underlying story.
Exactly. But what if one single kind of unassuming visual cue on that chart could offer a really profound insight?
Like a shortcut.
Sort of, yeah, an insight into the market's underlying psychology, pointing to a precise moment of collective, well, hesitation.
Interesting.
That's our mission today on the deep dive. We're aiming to cut through some of that noise to really unravel the nuances of this captivating, often underestimated pattern. It's called the spinning top candlestick.
Right. Collapse.
We've pulled together insights from, comprehensive technical analysis reports, some rigorous statistical studies, trying to bring you the clearest picture possible.
Good stuff.
So this deep dive, it isn't about finding a crystal ball, obviously. It's more about transforming this seemingly simple chart pattern into a powerful lens, a way to understand market equilibrium and those critical moments when, well, no clear direction has been set yet.
That's a great way to frame it. Equilibrium.
So let's unpack this.
So,
When we talk about a spinning top candle, what is its core purpose? What's the nuanced message this pattern is really trying to convey about the market state at that moment?
well, most candlestick patterns are sort of designed to hint at future direction, right?
Usually.
But what's truly insightful about the spinning top, though, is that its primary objective isn't really forecasting the next move with any certainty.
Okay.
Instead, it aims to identify this precise moment of market equilibrium, a really specific, temporary pause where neither the buyers nor the sellers can actually claim victory by the end of that session.
So not just indecision, but something more quantifiable.
Exactly. It's not just, oh, the market's unsure. It's a quantitative snapshot of this very granular tug of war happening right then.
Ah,
And the market psychology baked into its structure is actually quite telling.
how so?
Well, take the long upper shadow, for instance. That quantifies the exact point where bullish conviction just ran out of steam against determined selling pressure.
Pushed it back down.
Right, forcing prices back down. And conversely, that long lower shadow shows sellers hitting an equally powerful buying floor, pushing prices back up again.
So fights at both ends.
Precisely. And the small real body, that's kind of the punchline.
Right.
It means that despite all that significant churning within the session, all that fierce battling,
Uh-huh.
the closing price ended up incredibly close to where it opened. So despite the wide swings, neither side really gained a significant advantage.
Wow. So it's like a freeze frame of the fight.
It's a vivid image, yeah. An ongoing power transfer, maybe highlighting a potential crack in the momentum of the existing trend rather than just being a static, isolated event.
That dynamic image, a market in flux, is incredibly vivid. So, okay, how do seasoned analysts then go from recognizing that indecision to actually making informed decisions? What are the most common ways they actually apply this pattern?
That's a crucial question because when you properly contextualize it, the spinning top is remarkably versatile.
Okay.
Its most important application, I'd say, acts as a potential reversal warning.
Ah, the big one.
Yeah, when you spot it right at the peak of a strong uptrend or maybe at the bottom of a deep downtrend, it really functions like a yellow light.
Slow down. Something might be changing.
Exactly. It signals that the current trend is losing steam, it's losing momentum, and it might be poised for a reversal.
Okay, a warning sign. What else?
Well, beyond that, it's actually excellent for confirming consolidation or sideways movement.
Ah, and choppy markets.
Right. In those range-bound markets, if you see a series of spinning tops, it just reinforces the idea that the market is truly stuck in a phase of indecision. It's likely to just keep going sideways before some definitive breakout happens.
Makes sense. It confirms the lack of direction.
And thirdly, it's often a key component of more complex patterns.
Oh, like part of a bigger picture.
Exactly. It can be the central candle in some really powerful three-candle reversal formations, things like the morning star or the evening star pattern.
Okay.
In those patterns, the spinning top represents the very climax of that market indecision right before the potential shift happens.
Gotcha. The moment of peak uncertainty.
Precisely. But, and this is critical, a core principle to always remember here is that context outweighs the pattern itself.
Context is king.
Always. A professional trader doesn't just blindly trade a spinning top whenever they see one, they integrate it. It becomes a vital piece within a much broader trading thesis, something built on multiple converging analytical factors.
That makes perfect sense. Isolation is dangerous. So with such precise criteria for what it signals, how do we actually, spot one of these reliably on a chart? Are there strict visual rules or even quantitative ones?
Absolutely.
Yeah.
And being precise here helps distinguish it from other similar-looking candles. First off, it must have a small, real body.
Small body, okay.
Quantitatively, you're looking at the difference between the open and the close being small relative to the entire session's range, the height of the low. Think maybe a body ratio of less than 0.2, something like that.
So not much net movement from open to close.
Exactly. That ensures the net price change for that period was minimal.
Got it. What else?
Second, and this is really key, it needs long upper and lower shadows. Both have to be there, and they need to show significant length.
Reflecting that battle we talked about?
Precisely. They indicate substantial price action in both directions during the session. Ideally, these shadows should be roughly equal in length, which really illustrates that balanced, indecisive force.
Balanced forces.
Yeah. A good rule of thumb is maybe for each shadow's length to be greater than or equal to the body's length. If you want to quantify it, analysts might look for a shadow ratio greater than, say, 2.0 for both shadows.
Okay, small body, long shadows, roughly equal. What about the color? Green or red?
You know, the color of the body, whether it's green or red, is actually pretty secondary here.
Really?
Yeah. While it might offer a tiny, tiny nuance about whether buyers or sellers had a fractional edge at the close, the truly vital information is in those long shadows that represents the fight rather than the small body, which is the negligible net result. Focusing on the shadows helps you see the overarching indecision more clearly.
Interesting. So focus on the struggle, not the tiny outcome.
Exactly. And finally, and this might be the most important visual cue, its location is paramount.
Ah, back to context.
Always back to context. A spinning top only really carries significant analytical weight when it shows up at strategic positions.
Such as
Established trend tops, clear trend bottoms, or very close to key support and resistance levels that you've already identified.
that emphasis on location makes a ton of sense. But what about cases where a spinning top doesn't appear at one of those strategic positions? Let's say it's just floating mid-trend.
Right.
Is it completely irrelevant then, or does it just become, well, noise?
That's an excellent clarifying question. And generally, yes. If a spinning top appears right in the middle of a strong, established trend, far away from any significant support or resistance, it often is just noise. It might signal some minor temporary indecision, maybe a brief pause for breath. But without that strategic context, it offers very little actionable insight for a potential reversal or even a continuation setup.
So it really loses its punch without the right backdrop.
Completely. It just underscores again that context is everything.
Okay, got it. So given that, it really sounds like a systematic approach is essential here, not just relying on gut instinct when you see one.
Definitely.
So what's the actual decision-making process a trader would typically follow when they identify a valid spinning top in a meaningful location?
You're absolutely right. It's systematic.
Right.
And it's a process that deliberately shifts trading away from trying to predict towards being highly reactive to what the market confirms next. So step one, contextualize. Always start by identifying the current market trend. Is it clearly up, down, or just going sideways?
Right.
That's foundational. It sets the whole stage.
Trend first. Okay.
Step two, identify the pattern itself. Strictly apply those visual and quantitative criteria we just discussed to make sure it's a genuine spinning top, not something else.
Check the boxes.
Yeah.
Small body, long shadows.
Exactly. Step three, evaluate its location. Pinpoint where it's appearing relative to that trend and any key price levels nearby. Remember, context is everything for its significance.
Wait, is it at a peak, a trough, near resistance?
Precisely. Now, step four, and this is arguably the most crucial step and the one most often overlooked, especially by newer traders.
Okay.
Wait for confirmation.
Patience.
Yes. Never act immediately just because you see a spinning top. The pattern itself signals indecision. Therefore, you absolutely must wait for the next candle, what we call the confirmation candle, to fully close.
Don't anticipate the outcome of the indecision.
Exactly. Let the market show its hand. And then finally, step five, you react, but only based on that confirmation candle's message.
Okay, so what are the reactions?
Well, if that next candle is a strong bearish candle, maybe an engulfing pattern, and it clearly breaks and closes below the spinning top's low, that confirms the sellers won that prior tug of war. At that point, you might consider initiating a sell position.
Okay, confirmation from sellers.
Conversely, If the next candle is strong and bullish, breaking and closing above the spinning top's high, that confirms the buyers prevailed.
Then you might consider buying.
Right. You might look for a buy opportunity. But, and this is important, what if the next candle is another indecisive candle? Maybe another spinning top or a doji. That signifies the indecision is simply continuing. The battle rages on. And in that case, the wisest move is often to just do nothing. Stay flat, wait for clearer confirmation later.
It's really interesting how that completely redefines the trader's role, doesn't it? It shifts you away from trying to be a fortune teller to being more like a patient investigator, just gathering evidence before making a move.
Like a perfect analogy. Detective, not prophet.
Now let's get into the hard numbers. We've talked about what it means psychologically, but how reliable is this pattern statistically? Especially when it comes to predicting those reversals it sometimes warns about. Does it actually work in a quantitative sense?
Yeah, this is where we uncover a really common misconception, and I think it's quite illuminating. First, just on frequency. The spinning top is a very, very common pattern. You'll see it frequently on charts across pretty much all time frames and assets.
Okay, so they're everywhere.
They really are.
Yeah.
Now, for the critical part, it's reversal probability. Statistical studies, and some of the most well-known are by the technical analyst Thomas Bulkowski.
Ah, yes, Bulkowski.
Right. His research, and others like it, consistently show that its actual probability of leading to a reversal is only around 50% to 51%.
50%. That's basically a coin flip.
Exactly. And here's the profound aha moment that so many traders miss. This isn't a failure of the pattern.
How is that not a failure? 50% sounds pretty bad for prediction.
Because its job isn't prediction. It's a remarkable success in quantifying market indecision.
Ah, okay, say more.
It means the pattern is accurately signaling that at that precise moment, the market is genuinely, statistically directionless. It's perfectly balanced, and knowing that is incredibly valuable information.
Why is knowing it's 50-50 valuable?
Because it stops you. It prevents you from making impulsive trades, from betting on a direction when the market itself hasn't committed to one. It tells you, hey, pause, wait for clarity.
So its value is in revealing the lack of edge at that moment.
Precisely. And furthermore, even when prices do eventually break out from the spinning tops range, Bulkowski's research also shows those breakouts rarely lead to strong, sustained new trends.
Really?
Yeah, it reinforces this idea of underlying momentum weakness or exhaustion associated with the pattern. The indecision it signaled was real and has lingering effects.
Wow. So it's a success precisely because it accurately reflects that neutrality, that 50-50 balance. That's a powerful distinction.
It really is. It reframes how you use the information.
Okay, that makes sense. Now, are there other candle patterns that might look superficially similar to a spinning top but actually carry entirely different implications or maybe have different reliability stats?
Oh, absolutely. And differentiating them is really crucial for traders. The two that most commonly cause confusion are probably the doji and the high wave candle.
Right. Doji and high wave, how do they differ?
Okay, so both the spinning top and the doji signal indecision, a lack of decisiveness. That's the common ground.
Okay.
The key difference is purely in their morphology, their shape. A doji has its open and closed prices virtually identical.
Yeah.
So the body's basically just a flat line, or almost flat.
Like a cross or a plus sign?
Exactly. Which signifies near absolute deadlock. A spinning top, remember, still has a small but visible real body. That suggests a slight, even if minimal, bias by the close.
So doji is even more indecisive?
Generally, yes. Many analysts consider the doji a slightly stronger or maybe more urgent reversal signal because of that more extreme indecision, especially specific doji variants like the dragonfly doji or the gravestone doji.
Gotcha. And what about the high wave pattern?
Right, the high wave. Now, like the spinning top, it also features a small, real body and long shadows.
Sounds similar again.
It does. But the high wave is essentially an extreme version of a spinning top. The defining feature is exceptionally long shadows, often much, much longer than those you'd see on a typical spinning top.
So even bigger price swings during the session?
Way bigger. This indicates significantly higher volatility, and it often conveys a sense of, well, chaos or even panic in the market, rather than just simple indecision.
Ah, not just indecision, but maybe turmoil.
Exactly. It's often interpreted as a much stronger warning sign of an impending large price move, simply because of the sheer amount of volatile churning it represents.
Okay, so subtle differences in shape lead to different nuances in meaning.
Precisely. And, all of this just brings us back again to that core principle of confluence.
Right. Not trading signals in isolation.
Never. A single signal, especially a fundamentally neutral one like the spinning top, is rarely, if ever, sufficient grounds to base a trading decision on. The real power, the edge in technical analysis, comes from getting multiple independent signals all aligning, all pointing in the same direction.
So the spinning top fits into that puzzle.
Exactly. In this light, the spinning top often serves best as maybe a critical catalyst, or perhaps the final confirmation piece, within a larger, much more robust trade setup involving other indicators or patterns.
Okay, that makes a lot of sense. Given its neutral nature on its own, then, and this absolute need for confluence, how do professional traders really leverage the spinning top effectively? What are the sort of optimal strategies to extract actionable insights from it?
Right. Well, experienced traders consistently adopt what we can maybe term the seek confluence and await confirmation super strategy. It combines those key elements.
Okay.
And the golden rule, number one, as we've really hammered home, is unwavering. Always wait for that confirmation candle. Never preempt it.
Patience is key.
Absolutely. If you see a spinning top at a potential trend top, you wait for that strong bearish candle closing below its low. If you see it at a trend bottom, you wait for the strong bullish candle closing above its high. Non-negotiable.
Got it. Wait for the proof. What else? How do they build confluence?
Well, another very effective tactic is to combine it with oscillators, things like the relative strength index, the RSI, or maybe stochastics.
How does that work?
So for instance, imagine a spinning top forms right at a clear trend top. If, at the same time, the RSI reading is above 70, indicating an overbought condition, that creates a much more powerful confluence for a potential sell signal. It suggests the trend is not only pausing the spinning top, but also potentially exhausted the RSI.
Multiple signals agreeing.
Exactly. And conversely, seeing a spinning top at a trend bottom, when the RSI is below 30, oversold, significantly strengthens a potential buy signal.
Makes sense. What else can you combine it with?
You could also combine it with Bollinger Bands and volume analysis.
Okay.
So if a spinning top forms precisely when the price touches, say, the upper Bollinger Band, that suggests price is hitting a volatility extreme. If this happens and it's accompanied by a noticeable spike in trading volume.
High volume on the indecision candle.
Yes. That dramatically strengthens the potential reversal signal. It suggests a strong battle occurred at that price extreme, potentially leading to exhaustion. The same logic applies at the lower Bollinger Band.
Interesting. Volume adds conviction to the struggle.
It does. And crucially, perhaps most powerfully, its signal gets amplified when you combine it with significant market structure.
Meaning support and resistance?
Exactly. Its power multiplies when it appears right at key technical levels, like well-defined horizontal support, or resistance zones, established trend lines, or even important Fibonacci retracement levels, like the 50% or the 61.8% retracement.
So the indecision happening right at a known barrier is extra significant.
Hugely significant. It's like the market arrived at a decision point and couldn't push through, signaling a potential turning point.
Can you give maybe a quick example, like a case study?
Sure. Let's imagine, say, on a 4-hour chart of the euro-US dollar pair, a spinning top forms right at a very strong, previously tested resistance level. Okay?
Yeah.
And then the very next 4-hour candle is a convincing bearish engulfing pattern, closing well below the spinning top's low.
Confirmation.
Right. And on top of that, maybe the RSI was showing over 70, and perhaps the MACD indicator was showing bearish divergence.
Wow, that's a lot of agreement.
That's confluence. That combination provides a much higher probability short trade setup than just acting on the spinning top alone.
That paints a clear picture. What about a failed trade example?
Oh, easily. I've seen countless times where maybe a less experienced trader spots a spinning top near what looks like a stock's bottom, and they get excited, thinking reversal. And they buy immediately without waiting for that crucial bullish confirmation candle closing above the spinning top's high.
Impatience.
Exactly. And then what happens? The downtrend just resumes on the next candle, the stop loss order gets triggered, and they take a loss. All because they didn't wait for confirmation.
Ouch. A costly mistake.
Very. And it just underscores the absolute necessity of waiting for confirmation and, just as importantly, always using stop loss orders to manage risk. You know, it's funny, the spinning top's biggest apparent weakness, its inherent indecision, paradoxically becomes its greatest strength in a way.
How so?
Because it forces discipline. It forces you to adopt a more systematic, evidence-based decision-making process rather than just gambling on a feeling.
That's a fantastic point. It demands patience.
It really does.
This has been an incredibly insightful deep dive into one small but clearly quite powerful pattern. Looking ahead now, Where is the analysis of these kinds of patterns heading in the future? Is it becoming more quantitative, more data-driven?
Oh, indeed. The whole field is really shifting from what was once considered more of an art
Right, subjective interpretation.
towards a much more sophisticated data science.
Yeah.
We're definitely seeing the immense potential of AI and machine learning, specifically things like convolutional neural networks, or CNNs.
How are they being used?
Well, these networks can essentially be trained to see chart patterns, including spinning tops, and identify them with incredible accuracy, often far surpassing human capabilities in speed and consistency.
Wow.
And beyond just identification, AI can now calculate things like success probabilities for a specific pattern instance based on dozens of concurrent factors, the trend, multiple indicators, volume patterns, maybe even integrated news sentiment data.
So quantifying the confluence factors automatically.
Exactly, taking Confluence to a whole new level. Another really transformative area is automated backtesting.
Testing strategies on historical data.
Right, but on a massive scale.
Yeah.
This allows us to statistically identify the specific conditions and filters the exact combination of trend, volatility, indicator readings, where a pattern like the spinning top historically delivers its highest predictive performance.
Across thousands of assets and timeframes.
Precisely, something a human could never manually test effectively. And looking even further out, we're seeing exciting developments in the integration of sentiment analysis.
Pulling in data from social media and news.
Yeah, combining the visual technical signals from patterns like the spinning top with real-time sentiment data scraped from Twitter, news feeds, forums, trying to get an even more powerful, holistic insight into market psychology.
Fascinating. So the future is more hybrid, human and machine.
It seems likely. Ultimately, the future of really leveraging these patterns effectively might not be human traders directly acting on every single signal they see. It might be more about humans designing and overseeing intelligent AI systems that can trade these patterns, applying these complex confluence rules with unparalleled efficiency and systematic precision free from human emotion.
A very different landscape. So, wrapping this up, we've taken this seemingly simple candlestick pattern, the spinning top, and really discovered it's far from basic.
Not at all.
It's actually a powerful, nuanced signal of market indecision. It acts like that yellow light in the trading world, prompting you to pause, take notice, and seek further evidence before proceeding.
Well paid.
And perhaps the biggest takeaway, the real aha moment for me, is understanding that its statistical 50% success rate for reversals isn't a flaw at all.
Right.
It's actually precise and incredibly valuable information about market neutrality. It tells you exactly when the market itself is fundamentally undecided.
Knowing when not to bet is just as important as knowing when to bet.
Absolutely. So maybe a final thought for everyone listening. How might understanding these moments of market indecision and the kind of discipline they demand from traders, how might that make you a more patient and systematic decision maker in other complex areas of your life?
That's a great question.
Or, what other seemingly neutral or weak signals, maybe in data you look at, or even just in everyday situations, could actually be providing incredibly precise information? If only we learn to properly interpret their full context and develop the discipline to await confirmation before acting.
Food for thought, definitely.
Thank you so much for joining us on this deep dive today.
My pleasure. Is a great discussion.